To build anything that truly lasts, it takes time.
But first up, let's get started with all the cues that we are getting from global markets. And Kanishka, US markets first up.
That's right, Ashesha. Very good morning to you, first of all. After a day of a muted trend, the US stock futures, they're largely steady ahead of the June big jobs report that is due later in the day today. Now, if you look at the stock movement overnight, the S&P 500, that rose almost 0.5% to notch a record close. The broad market index that also posted a fresh all-time intraday high. The tech-heavy Nasdaq composite, that rallied almost 1% to a record close, whereas the 30-stock Dow index, that trailed behind with a narrow loss of 0.02%. Now, remember, these moves followed an announcement from the US President Donald Trump on Truth Social that the US has struck a deal with Vietnam, which includes a 20% tariff on imports from the country. Goods that originated in another country but were transferred to Vietnam for final shipment to the US will be levied a 40% tariff duty. Now, traders are now awaiting that June non-farm payrolls reading. Economists polled by Dow Jones, expect that the US economy added about 110,000 jobs last month. However, this compares to May's gain of 139,000 jobs. Now remember, economists are also seeing the unemployment rate inching higher to that 4.3% level, up from 4.2% in the month of May. Other than that, if you look at investors, they're also following along the progress on Trump's tax mega bill, that is the big beautiful tax bill, which finally passed the Senate on Tuesday. The bill has now returned to the House, where negotiations among Republican lawmakers, they remain heated. Now remember, Thursday will also be a shortened trading session with the New York Stock Exchange and the Nasdaq closing at 1 p.m. US time. And also the US markets will remain closed on Friday for Independence Day.
Yes, US markets will remain shut tomorrow, and it will be a half day in today's trading session as well. But shifting focus from US markets to commodity markets then, and lots happening in the world of commodities as well. First up, let's put the spotlight on oil, because Brent crude today, although it is sitting with a cut of nearly 0.5% as we speak, yesterday it rose nearly 3%, and currently it is trading near that $68.8 per barrel mark. Now, as Kanishka mentioned, trade deal with Vietnam has now been signed by the United States, and there is more optimism that perhaps trade deal could be signed with other countries as well ahead of that July 8 tariff deadline. So on the back of this optimism, we saw that uptick come in the oil market as well, currently trading near that $69 per barrel mark. But apart from that, Citi has come out with a report, and Citi believes that OPEC Plus could slow down its production hike if Brent crude nears that $50 per barrel mark. All eyes, of course, will be on OPEC Plus meeting, which is scheduled to happen on Sunday, and expectations are that perhaps OPEC Plus group could consider another output hike of 411,000 barrels per day for the month of August as well. But yes, Citi expects Brent crude prices, if at all they were to hover near that $50 per barrel, OPEC Plus could slow down the pace of output hike. But let's also talk about the yellow metal market, because gold continues to remain in focus. Today, gold is sitting with a cut of nearly 0.4% as we speak. It has snapped its 3-day gaining streak to trade near that $3,345 per ounce mark. But remember, all eyes are on the payroll data that will come in from the United States, and any cues from there will determine the path of rate cycle by the Federal Reserve, and that will ultimately decide the path for the yellow metal as well. So that's how the commodity markets are positioned at this juncture, Kanishka.